All right. Hi. Good morning, everyone. This is Nabil Mattar, Premium Client Manager from IG. Once again, thank you for turning up on this early Tuesday morning for our live webinars. Winding down the year, just 2 or 3 more weeks to go before we wrap up 2014. So still really good trends out there. Before I start, let me just go through the disclaimer. Okay, just a quick one. Basically, this webinar is purely for education. It does not take into account specific investment objectives, financial situation, or particular needs of any particular person. Any person acting on it, consequently, any person acting on it does so entirely at their own risk. Okay, so moving forward, let me just start by looking at the indices. A lot of the markets I mentioned just now has been trending. Of course, the yen pairs like dollar yen, euro yen, pound yen, basically all the yen pairs have been in one direction. Aussie dollar has been weak for the past 2 weeks or so. Euro dollar, pound dollar has just been grinding itself downwards. The indices, which is what I'm going to look at now, is just grinding itself upwards. Okay, so for those of you who are new to the webinar, how I cover the markets is basically I'll use a top-down approach. I always look at the weekly and daily charts to form a bias, whether I'm bullish, bearish, or neutral. And once I form a bias, I zoom in to maybe the 4-hour or 2-hour chart to try to plan a trade. So I'm really big on bias. If you see my charts, I do not have any indicators. It's not that I don't use indicators, but I just want you guys to be very familiar with looking at a naked chart, understanding price action, understanding which market phase the chart is in, and forming a bias. This is very, very important, okay, before you even plan a trade. So looking at S&P 500 on a weekly chart. Now, if you see this again, really nothing much has changed. Bullish. The only slight correction was made in October period, and then it shot up again. So nothing much has changed for the past few weeks. Still very bullish. It sort of hesitate. I mean, the bullish uptrend is a bit exhausted around the 2080 area. Okay, so weekly chart, there's nothing much to infer. It's just uptrend. All right, it's been uptrend for the past few weeks. So let's zoom into a daily chart. Now, taking a closer look now, if you can see the daily chart, okay. Last week we made a slight pullback over the 2050 and then it made a assault on the highs again. Couldn't convincingly break the 2080 area. All right, so to me, 2018 seems to be where a lot of people are locking their profits for now. Okay, because it came up here, test, came down, came up here, test second time, didn't break it, came down again. All right, so for now, 2018 will be a resistance we are looking at. So if you see the past two candles, I think Monday and yesterday's and today's candle, all right, it's called bearish engulfing candle, and it seems that this resistance is quite strong for now. What we are looking at is two scenarios: a bit of consolidation. Let me just draw this trend line. Okay, so a bit of consolidation here. All right. So, and you can see that this level here around the 2050 area is support as well. So what I'm looking at is overall it's still bullish. All right, my bias, especially for weekly and daily chart, is still bullish. Short-term intraday or maybe within the week, we might see a bit more consolidation, but the key support and resistance levels to look out for is basically this trend line for support or around the 2050 area, and resistance is around 2080. Anything in between this area, I'm staying away. Okay, I like to trade only at key support and resistance levels. I don't like to trade anywhere in between those. All right, if I go into the 4-hour chart, you can see a bit more clearer consolidation. You can see that the clear resistance level is what I drew just now near the 2080 level, and you can see just ranging around this level here. Okay, now I notice a lot of new traders, they always get killed in between. All right, the way I see this is anything in between is no man's land. I do not want to get involved. All right, so once again, take note of the trend line which I drew on the higher time frame, which is this one. Okay, either this or the 2050 area. Those two are support areas I'm looking at before we decide what the market wants to do. Okay, but overall, bear in mind that longer term charts is still on the uptrend. Okay, this for the S&P. Now, let me just move on to the next one, the DAX. Okay, this is the German 30 or the DAX. Okay, taking a look at the weekly chart. Now you notice most of the indices, the global indices like the DAX, the S&P, Wall Street, FTSE has been really bullish, and the DAX has simply broke through this channel and the key resistance level of the 9,800. Okay, now right now if you look at the weekly chart, right? Now question, would you consider this a breakout of this resistance level? Okay, 10,000 is a whole number, so you can call it a psychological resistance level. You also can call it a visual resistance level based on the number of candles that could not break this 10,000 level around June, July period. So question, based on the price action now on this green candle, do you consider this as a good breakout on the DAX weekly chart? What do you guys think? Yep, so some of you say yes, some say no. All right, I mean, okay, how you take this is if you look at the weekly candle, right? Yes, you're right. There is a candle close above the 10,000 area. So you can consider this a break, right? So, but what you want is to look out for more clues on the shorter, lower term time frames to see whether you have a case or you have evidence to support your bias. Okay, so the first level of support is this. Very clearly around the 9,900 level. Okay, let me delete all the other drawings that I made previous weeks to avoid confusion. So the 9,900 level is a key support. The next level of support is the 9,008 based on the longer term charts, right, that we are aware of. So this whole level here is support. Now, right now, the price action is a bit mixed. This candle here, this red candle with two long shadows at the opposite ends, most probably is caused by news. And then we have a bullish engulfing candle followed by a red candle. So it's a bit mixed right now. Now what I'm keen to look at is how price will react from the 9,900 support, or if it breaks the 9,008 support. Okay, of course if it breaks back above 10,000 and closes there for the week, then yes, most probably the bulls will continue on the uptrend. All right, but looking at the weekly chart, the swing, this little swing here. All right, let me just draw this for you. This little swing here, okay, seems a bit overextended. All right, seems a bit overextended, and I prefer a pullback to take the trade simply because I like to keep my risk lower. All right, I'm a pullback trader, so what I prefer to do is that let it pull back to around support levels, and hopefully continue upwards again. Okay, but this can be considered a breakout because it's a nice weekly candle close above all this resistance level. Okay, so something you might want to look at. But how you take the trade, again, I repeated this many times in previous webinars on how to take breakout trades. Either you take a pullback, like what I like to do, or you place an order at the breakout level. All right, so it depends on how you like to take it. But this can be considered a breakout. I'm just prefer to have a bigger pullback, perhaps back to the support level before seeing go up again. Okay, so bear that in mind. All right, so that's the DAX for you. Now moving on to the Hang Seng. All right, if you look at the Hang Seng and you compare what last week's webinar, basically is doing absolutely nothing. All right, because there's really nothing you can infer or nothing you can analyze. I drew this triangle consolidation last week and it seems to be still stuck there. Okay, I think last week we were at this candle here. We were testing this trendline resistance and it's just really no direction at all. All right, so just look at this weekly consolidation pattern to give you a guide of what the Hang Seng might do longer term. Daily chart, even worse. All right, look at this price action. I drew these circles because I was going through how to analyze price action. So basically, you got a series of higher highs, higher lows, higher high, higher lows, higher high, and then you got a lower low, and you got another lower high, but now you got a double bottom here. Okay, last week I drew this because I anticipated lower low, but apparently it came out as a double bottom here. Okay, so if you see price action like that, it's really mixed. And this is the kind of chart that I would really want to stay away from because there's no clear direction. Weekly is stuck in a symmetrical triangle. Not much to infer there. Daily, you see a range of green candles, then a range of red candles. So really, really nothing much to tell. So Hang Seng, in my opinion, is something that I like to stay away from. I mean, if you guys only trade a Hang Seng and like to scalp the markets, I mean, there's no wrong in doing that, but just be very, very pay close attention to the key support and resistance levels. Okay, so that's the Hang Seng for you. Now, any other indices that you guys like to look at before I move on to the forex pairs? If you guys got I mean, if you are new to the webinar and you have any questions on how I analyze the market or things like that, please feel free to shout out. Yeah, I try to go through. Nothing like learning the live market. This is the best way to do it. Okay, so let me move on to forex right now. Now, I'm going to start with everyone's favorite pair, the euro dollar. Okay, so let's start with the euro dollar weekly chart. Again, you notice that the higher time frames, there's really not much changes in between when it comes to trends. I mean, if you see from June onwards, when this particular low was broken, let me just draw a line here. Okay, when this support level was broken, we have been in a downtrend from August, September, October, November, and now December. So there's almost like, what, 5 months of downtrend? And there's really no change. So if you want clarity in your trading, if you find yourself being mucked around in the shorter term charts too many times, make it a point to try to follow the direction of the longer term charts, because a trend can really, really stay and last for very, very long. All right. So if you look at euro dollar, after it broke the 1.34 support level all the way back in July, it has never looked back since. And I just like to make a very important note for a lot of retail traders out there, and that is to cut your losses. Okay, to me, cutting, I mean, I mentioned this during my seminars many times. One of the biggest rule in trading, especially for retail traders, is to cut your losses. All right, we are traders, we are not investors. All right, when you're investing, you have to put on a different cap. When you're trading, you have to put on a different cap. So if you are, let's say if you're long euro dollar at 134 and the thing broke, nice breakup downwards, there is no reason, all right, for you to hang on to your long euro dollar positions at 1.34, hoping that it will come back. All right, there is absolutely no reason for you to do that, because a trend can stay for a long time. All right, I mean, if you're still holding on to your euro dollar longs at 1.34, right now we are a couple of 1,000 pips away, all the way to 1.24, 1.23. What do you think must happen for it to come back all the way up here? Something must really, really fundamentally change, isn't it? So it's either you have the patience to wait out, you know, for the market to reverse all the way up, which probably take a few months, or you're just hoping for Draghi or something to some miracle to happen in the EU for it to shoot up. All right, so I mean, in terms of probability, that is very, very low. And as retail traders, as traders generally, we always want to look for high probability setups. Okay, so if you're wrong, get out, reaccess your position, reaccess your plan, and you can always enter the market again. There's no point holding on to losses. All right, it's not only detrimental in terms of trade planning, it's very bad for your psychology as well. Okay, because every day you'll be staring at the screen, just hoping that the market will come back for you. And hope is a very, very dangerous word when it comes to trading. All right, just something I thought I wanted to emphasize today, based on my years of experience managing clients. I always see the same kind of behavior. Okay, so please have a think about it. All right, Andrew. All right. Andrew says that please repeat the methodology to prevent false breakout to false sell. Okay, will do. I can do it on the euro dollar as well. No problem. Okay, so Andrew has a question in terms of to repeat my methodology on how to trade the breakouts. Yeah. So very simple. I mean, if you want a bit more examples, you can view last week's webinar's recording as well. But basically, when I trade breakouts, right? Let's say if this is a channel consolidation area. The first way to trade it, how I like to trade it, is it breaks above a key resistance level. Number one, I want to study the break. Okay, the break, the strength of the break is very important. And to analyze that, I measure it based on a candle close above a particular level. So if you look at this level here, if this is a resistance, I want to see at least a candle close above it. The more bullish, or for this case bullish, the more bullish the better. Okay, and you can play around your time frames. You can go down a few time frames, you can go up a few time frames to try to see whether a breakout is legit or not. Yeah, because sometimes on the shorter the time frames, the breakout might be like this, a candle close above, you might think there's a good breakout, but on the higher term time frames, the candle might close like that. So this might not, doesn't look as good as this one, isn't it? Okay, so it's very important. I mean, I use candlesticks to time that. So if I'm looking at, like, if I see like a daily chart breakout, you should be a bit more patient because the daily candle closes only at the end of the day, isn't it? But if you're trading the US session and your candle is closing, in a couple hours time, you can actually wait for the candle to close to see how is it. All right, same thing whether you're trading a 1 hour or 4 hour chart. If you are trading a 1 hour chart breakout, you can always see that if it's close to your 1 hour mark, let's say now it's 10:48 a.m., it's only like what, 12 minutes more before the it's only like 15 minutes more before the candle closes. So you can wait and see whether the candle is it a good breakout to access the strength of it. Okay, so the number one is to access the strength of the break, very important. Number two is to plan your entry. Now there are two ways to enter the trade. Ideally, you can wait for it to come back down to the scene of the crime, I call it. So basically, this is your previous resistance turn support level, and you can take a long here, stop loss below the previous swing, or all the way below here, below the consolidation pattern. Depends on your risk to reward ratio. Okay, so this is the first way I like to enter. Wait for pullback to the previous scene of the crime. Look for some form of evidence here that the market wants to push up again and take a long here. Stop loss either here or here. Depends on your risk to reward ratio. Okay. The other way that you can do it is a bit more aggressive, but basically you are not waiting to access the strength of the break. So there's not really an assessment here. What you're doing, you can just place an order, or if you're in front of your screen, you basically enter a buy trade immediately at just maybe a couple of pips above the breakout level, and hopefully it will continue its way up. Now just notice that whether you do it this way or whether you do it this way, your stop loss is always around the same area. It's either below the previous swing or below the consolidation pattern. All right, this is an example to go long. Yeah, short, same thing, just the opposite way. All right, so there are two ways to take it. It's just that your stop loss logically should always be the same, regardless of whether you're taking the A type of entry or the B type of entry. Okay, so again, it's back to risk reward. I prefer A because it's more conservative. All right, because notice you wait for pullback, your stop loss is here, you're risking only here, this portion here. But if you take the if you take a breakout entry, and let's say your stop loss is somewhere here, you're risking more. You get what I mean? So it depends on your risk to reward. Yep. I mean, certain currency pairs or certain instruments, I would prefer B. For example, like your gold, silver, oil, Aussie dollar. This commodity currencies, sometimes it doesn't give you a pullback that you like, and it just goes continue upwards. So for such instruments, normally I prefer B entry rather than A. Okay, Andrew, does it answer your question? Okay, great. So let me continue on to euro dollar. So euro dollar, this is a weekly chart. So again, like I mentioned, long-term charts, trends can stay for a long period of time. Okay, so weekly chart has been bearish, really bearish. Let me just take you to the monthly chart for a while. just to give you a bit of a bigger perspective of what we're looking at. Now we can see that on the monthly chart, right, there's actually a very big kind of consolidation happening on the euro dollar. So you can see, you can draw something like that. Okay, so you can see that when it hit the resistance trend line, it came down all the way. This is a bit like a descending triangle formation. And this is the support level that we're looking at. Anywhere between the 120 to 122 region. So we still got about 100 pips more to go if you're still bearish. Alright, so this whole region here, again, we are looking at very long-term charts. So a support level is not precise. Okay, I mean, it's basically a range. So anywhere between 120 to 122, it might even make a pierce through to 1.19 before it starts consolidating, something like what we have here. Okay, but the trend is very bearish at the moment. Okay, I know some of my clients, when I speak to them, I say, oh, take a look at the euro dollar monthly chart, consolidating a descending triangle, and we're looking around this support that, you know, it might mean the bears might get exhausted. And what they do is that they just line up to buy at 120 once it hits there. Okay, it's really, really counter trade. I'm not saying it's wrong. It really depends on your type of trader. It's definitely not my cup of tea. All right, when I say 120 is support, I need to look at the trend. If the trend is down, even though support is there, it doesn't mean I just buy it like that. Okay, but I know some clients I speak to or some traders are really counter trend. No wrong. It's just that you need to know what you're doing. That's the most important. Alright, sometimes if you trade the trading market, let's say dollar yen, even if you're totally new to trading, let's say you only picked up trading for 1 week or 1 day even, and you just see that things going up and you just place a buy entry and you close your eyes, keep it there for a couple of days, you can be profitable. It's that easy, right? But if you are a counter trend trader, you need to absolutely 100% know what you are getting into. Because if you're going to enter, for example, a buy at 120, thinking that on the monthly chart is strong support, if the support is convincingly broken, and this is applicable to any time frame, yeah, if the support is convincingly broken, you need to know you need to get out. Very, very important. Okay, counter trend trading is much more technical. It's much more difficult. You need to know what you're doing. Okay, so look at the 120 to 122 support level. We're not there yet, but it's just super bearish on the euro dollar. Okay, let me jump to a daily chart. This was a trend line that I drew all the way since 2 to 3 webinars ago, and you notice that this trend line tested so many times, still respected. November was respected, December was respected, and I just like you to pay attention to this green candle here. Now this was a bit of a false, just a bit of a bullish a rally. I think it came out during one of the ECB meetings or one of the ECB European news release. But you notice that how the news release also respects the resistance trend line. Okay, so for me, because I'm a pure technician, I still trust my charts a lot. All right, I still put my charts first, news second, because for me the levels are even more important. So this trend line is still very key. It's still in play. If you go back 2 or 3, 4 webinars ago, I'll be talking about this trend line. Is still intact. All right, the thing now is that it had broken a new low. Okay, it did a daily double bottom, and I did mention that double bottom, if it breaks the 125 and this trend line convincingly to the upside, we might see a bigger retracement to 126 or 128 even. Apparently it did not do that. It hit the resistance, came down, broke a new low. Okay, so what you want to look out for is, all right, what we might do is that we might go back up to hit this trend line again, and then from there it's either we go down again, make a new low, or it breaks the trend line resistance and starts consolidating, and that's how we might end up in the December period, especially if the market has no liquidity. When Christmas and New Year comes in, we might just consolidate around this level here. Okay, but this is a key level you want to look out for. This resistance, this trend line resistance, as well as the previous visual resistance level. Let me see what level is that. Around the 12350, 12360 area. Okay, if this level breaks, then we are looking, they might go back, consolidate all the way back to 1.25. Yep. Just put this way. All right, so that's euro dollar for you. Looking at the pound dollar. Okay, pound dollar, very similar story. Yeah. Look at the weekly chart. Okay, same thing. No change in the trend for the past 5-6 months. Absolutely no change. Downtrend, one direction. Okay, so weekly chart very bearish. If you look at the daily chart, this is a trend line that I drew since again 2 or 3 webinars ago, and this is the exact same trend line that we're looking at. All right, it's a very, very respected trend line. You see a number of touches: 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 10 touches to it. All right. The slight difference between the pound dollar and euro dollar is the euro dollar is slightly stronger. Sorry, pound dollar is slightly stronger. Okay. Because if you notice that it broke a new low here, but you see this green candle, it seems that it's tried to push back up to test this trend line again. Okay. Key level that you want to look out for now is, let me just bring this up for you. Okay, key level that you want to look up for now is around this trendline resistance, of course, and around the 1.5. Let me see. Anywhere between 1.5750 to the 1.580 level. All this area here is resistance. If you are thinking of counter trend trading to the upside, possible, all right. But this whole level of resistance, you need to be aware, because this trend line is a very respected trend line. It will take some momentum to push it, to break past it. Okay, but look at this trendline resistance is your guide, as well as the 15750 to 158 level for the week. If we stay below this resistance level, then I anticipate that we might just do something like this kind of sideways action. Possible. All right. So there's a pound dollar for you. Okay, let me move on. Hi, Ben. Thanks for coming. Okay, let me move on to the Aussie dollar right now. If you guys got any specific currency pairs for me to look at, please shout out, yeah? Hi, Miss Lee. Thanks for coming. FTSE, China, A50, and Shanghai Stock Index. Okay, I'll have a quick look. I'll have a quick look at it later, yeah? Let me just finish my Forex pairs, because just now I did indices already. Okay, let me move on to Aussie dollar. Okay, now Aussie dollar has been really, really weak on the backdrop of weak China news coming out since August-September period. Comments by the RBA saying that the Aussie dollar is a bit too high and things like that. All right, so really, really weak Aussie dollar, very strong downtrend, and again, weekly chart, things have not changed in terms of the trend for the past 4 or 5 months as well. Okay, when it broke a new low, lower high, lower low. That's it. All right, so always cast your eye on the higher time frame, because it's very simple price action. Lower low, lower high, forming a new low, maybe a lower high soon, and you just continue. All right, classic price action. Now, where we are right now, again, weekly chart, very bearish. Let me just cast your eyes on the monthly chart to see which levels we're looking at. Very possible right now we are testing next to, hold on. Okay, around, this is a really low level, yeah, 79.80 to 80 cents. All right, the rate is going, it might go there. I'm not surprised, really. I'm not surprised at all. The next level of support is really, I don't really see much strong support. Okay, maybe around where we are right now, 8250. Okay, so yes, it is a big range. This is a monthly chart. Okay, but 8250, we are slightly peer testing that level right now. All right, 8250, if not, we might even look at 80 cents. All right, because just the way it's just so bearish. All right, but this is the monthly chart for you, and you can see that there's a bit of a trend line going on here, something like that. All right, so there's every possibility that we might test even the 81 cents level. It's just that bearish. Okay, looking at back to the weekly chart, still bearish, nothing much to it, just bearish. Daily chart is bearish as well. Now, I like trading such markets. Okay, when you look at the yen pairs, when you look at the Aussie pairs, when you look at basically all the most of dollar pairs, it's just one direction since 4 or 5 months ago. It makes trading easy because the trend is very established on all the different time frames, especially the higher time frames. Okay, so Aussie dollar, you see how it came down, consolidated into a bearish flag, came down again, consolidated into another bearish flag, and came down all the way again. All right, so it's definitely bearish. Okay, outlook for the week. This is a 4-hour chart. Okay, this is something I drew just before the webinar. And basically where we are right now, okay, again, it's not the strongest of support there. It's around the 8250 level. Okay, this might be a support that you might want to pay attention to see whether there's a bit of, whether the bears are exhausted. Right now, there's no signs of it. Okay, so right now, there's really no signs. The trend is still very bearish. Okay, but this is the first level of support to see whether the bears are exhausted. So there's this trend line, 4-hour channel as well, support. So there are 2 levels support, 8250 visual support and channel support. We might see some consolidation here. Of course, if it breaks through 8250, 82 cents easily, just the way the market is trending at the moment, really strong momentum to the downside. Okay, and which backs my case. I think last week, if you watched last week's webinar, I was a fan of the Euro Aussie and Pound Aussie longs, so it worked out really nicely for myself. But basically, Aussie dollar is still very bearish. 8250 support to look out for. If it breaks below that, easily 82 cents. But look, use this 4-hour channel as a guide. Okay, the next level of the previous level of resistance you want to look out for is around the 83 cents level. Okay, if we break above the 83 cents, 83.10 level, then maybe we are going back to the top of the channel. All right, this one scenario that might happen. But if we break and makes a new low again, high chance 82. Okay, just because it's so bearish. All right, so the trend is very important. Even though I say 8250 is potential support, does not mean you should just close your eyes and buy like that. Okay, because it's very dangerous. Try to trade the trend. I mean, I'm not trying to just tell you. I'm not just telling you to just focus on trend trading. It's really up to you. But my style is just follow the trends. All right. So this is the Aussie dollar for you. Hey, hi, Mr. Wu. Thanks for coming. Notice the trend in Pound Aussie and Pound Kiwi. Which one could be a better pair? Okay, since we're talking about Aussie dollar, let's look at a few of the cross currencies like Pound Aussie and Pound Kiwi. As you can see, because the Aussie is just so weak, we have really nice breakouts on the Pound Aussie and Euro Aussie. All right, I did highlight this as well last week. So look at the weekly chart. You know why it says nice breakout. Look at this 185.80 to 186 level. Oh, let's call it 186. Previous resistance, previous resistance, previous resistance. Nice bullish breakout. This was the candle I was talking about. Okay, this was a candle, last week's candle. Nice close above. And right now, the bullish momentum is just taking away. And this might be a start of a new uptrend. Why? This was a new high compared to this high. So this is a higher high. This is a higher low. And this is a potential higher high. All right, so this is a weekly chart. Now, weekly is definitely bullish. Daily is bullish as well. Look at that. Look at the way the market. Notice when it broke 186, you notice how it came back to test. This little candle here came back to test 186 before it just shoots up again. So it is very bullish at the moment. Now, if you're not into any, I mean, let's say if you're bullish and you are not in any trade on the long side of the Pound Aussie, all right, do not rush into a trade. All right, always plan for it. Even though your analysis might be spot on, do not rush into a trade. Plan for it. Okay. So let's see where's the possible support. Right now we are quite close to 190. Okay, before I talk about support, let me just go to the higher time frame to see where's the next resistance. Okay, it's very clear that the previous high was around where we are right now, anywhere between 189.80 to 190. Okay, so we are approaching a key resistance level. Okay, even though we are bullish, we are approaching a key resistance level. Daily chart looks very bullish as well. Now, there's not really a nice, decent pullback yet for daily chart. It just makes very shallow pullback before shooting higher, shallow pullback shooting higher. So if you are planning to long this currency pair, especially if you are planning to take it on a weekly chart, because the weekly might be a start of a new uptrend, then you need to be patient. You need to wait for a nice, decent pullback. Okay? Now, going back to the daily chart, you can see that very bullish, isn't it? Now, where do you think is a good level that you want to see a pullback? Maybe back to support level. Where do you think is a good support level? All right? For that, I'm going to go down to 4-hour chart to try to find some cues. Okay, so you can see that this 4-hour chart, there's a nice little trend line going on here. Every time his trend line shoots up. Right now, okay, if you want to take an entry, again, we are quite close to resistance. You can take an intraday entry on the upside. All right, just target the resistance level to get out. But if not, I would prefer to let it come back to either of this trend line support. Maybe back to the 188.80 area to 189. Somewhere around here, because this is a previous trend line support level. So let me just draw a circle here. Okay, if the trend line breaks, then we need to look at back to this, around these levels here, around the 187.80 level. 187.50 to 187.80 level, around here. Okay, you can see that this have a bit, there's a cluster of resistance that might turn support somewhere here. Okay, so I'm looking at this trendline support, number one, if not back to these levels. But again, be mindful of your strong resistance up ahead. Okay, so even if you take your longs off the support. Now, the reason why I like pullback trading is this. Let me give you an example. This, we all know that we are very clear now that the trend is bullish. So all I'm looking for is support levels to take it to the upside. Okay, so let's say if it comes down here, we're also very clear that there's a lot of resistance around this level here. Okay, so let's say if it comes down here, hits my support, maybe I zoom into a shorter term time frame like 15 minutes or 1 hour, I show signs of bullishness, I take the trade and it goes up. My first area that I want to be concerned, let's say if I take a trade long here, my first level that I want to look out for is the previous resistance level, okay, or the previous high. Because if the trade is going to make a bigger pullback, this is where it will fail. All right, but if I take it at a good support level, if it goes to this level, I'm already in profit zone. So that's where you can decide either you can scale out some profits, or you can lock in your stop to break even, or you can wait to see whether it break out to the upside or new high. Okay, because if it does something like this, all right, then I'm already in profit. But so I can either get out of the trade, break even, and wait to see what happens next. All right, or I would have already scaled out some profits here. Of course, if it comes here and it makes a new high, then even better still. You can even load up more trades here. Okay, but this is the first scenario, this support trend line. Because if this support trend line breaks, most probably it's coming down to another level of support. But the overall direction is bullish. If you don't believe me, all right, unless something fundamental changes. If not, 2 or 3 weeks from today, maybe in January, when I'm doing the webinar, if I show you the pound Aussie or Euro Aussie weekly chart again, the direction might still be the same. All right, same thing for how the Euro dollar, Aussie dollar, dollar yen, pound dollar, especially your longer term charts. The weekly charts, the trend does not change much. All right, if it's established, it will normally stay its course for quite a long period of time, couple of weeks, couple of months even. Okay, so take a look at these two support level. All right, so that's just for pound Aussie. What's the other one? Pound Kiwi. Okay, so let me just go to pound Kiwi. Again, I know some of you might not be trading these currencies or these instruments that I'm talking about, but it's very, very good. I'm trying to incorporate a lot of lessons into a lot of trading psychology and trading strategies elements into my live market analysis. All right, when you come to this analysis, don't just try to hunt for, oh, Nabil says this is a good buy, this is a good sell, this is a good level. No. Understand the thought process, understand how to trade plan properly, and incorporate it into your trading. It's not about finding trade calls. Okay, it's about being a better trader. All right, so pound Aussie, pound Kiwi. Interesting, I've not seen pound Kiwi for a long time. Let's have a quick look. I notice you like all these cross currencies, yeah? But yeah, I mean, good call. I mean, all these cross currencies, sometimes it can be hiding the background, but they can be very good trends, okay? So, weekly chart. Okay. Now, looking at the two charts, right, we have the pound Kiwi and we have the pound Aussie just now, you notice that the pound Aussie has broken a new high, but the pound Kiwi is still within this resistance level. Let me just draw it here, somewhere here. Okay, anywhere between 2.05 to 2.07. Okay, the price action, let me see. I don't really like the price action on the pound Kiwi. Let me just go through the price action with you, okay? So we have a bit of a series of higher high, higher lows, higher high, higher lows, higher high, higher lows. So this is an uptrend. But what it did after that, okay, this big bearish engulfing candle caused it to make a lower low. So if you see the weekly chart, the trend is not as smooth as the pound Aussie chart that I just went through just now. Right now, yes, the past few weeks it has been bullish. It is testing a key level of resistance still, but the trend is quite mixed. Okay, I can draw up a support trend line here for you. But for it to be a really nice start of a long-term uptrend, what it must do is that it must clearly break all this resistance level before making its way upwards. Okay, so this whole resistance level needs to be broken first. So slightly different from the pound Aussie. Okay, in terms of uptrend, weekly chart, pound Aussie seems to be better for me. Okay, yeah, targeting 210 high. Yeah, it is possible, but just be a bit patient on this one. Let it break this level. Same thing for pound Aussie. I mean, again, wait for better support levels to take a trade. But for pound Kiwi, you want it to clear break between a break of this resistance level here before you want to take it up. Okay, if you're looking for a long-term trade, a swing or a position type of trade, it doesn't make sense to buy close to resistance. It really doesn't make sense because let's say if you buy where we are right now, just for example, let's say if you buy where we are right now, let's say if you're just trading off the weekly chart. Now, where do you think is the logical stop loss? A logical stop loss will be what? Below this low, right? Or below this trend line, right? Or maybe you can put it here. Now, what price is that? It's around the 198. How many pips away is that? A couple hundred pips. But your resistance is just here. So basically your risk to reward, I mean, the logical level of a profit target will be a resistance area, isn't it? This is your reward, but this will be your risk. So it doesn't really make sense. Okay, so if you're a swing trader, especially if you're trading off the weekly chart, I hope you understand risk to reward. Okay, your stop loss and the resistance right now is just too close. Okay, let me go down to the daily chart. Okay, for the daily chart, yeah, I mean, it looks the same as the pound Aussie. A bit overextended to me. A lot of key resistance up ahead. First level of pullback I want to look up for. Let's see if I draw this. No, this is not nice. Okay, let me draw a support trend line here. Somewhere around here. The previous touches here. Anywhere between these two areas here. Around the 2.03 level. Okay, this level will be a good support level to look out for. Okay, let me zoom into a 4-hour chart to try to look for more support levels. Okay, 4-hour chart is giving me a bit more clues. So on the 4-hour chart, first thing first, you can draw a nice little trend line connecting these points. You can also draw a trend line connecting these points. And the first level of support, short-term support you want to look out for is, like I mentioned, the 2.03 area. That's where I drew on daily chart, or around this level here. What's this? About 2.038, 2.04. Okay, but have this trend lines drawn. There are a few possible scenarios. Back to this support here, trend line support. Okay, I prefer the 2.03 area. All right, it takes some while to get to there. Okay, it'll take some time to get to there. But it might happen. So you just gotta be patient. Okay, first level is around 2.370, 2.380 level. Next level support around 2.03. All right, some of you might say, "Oh, Nabil, how can you be so? Why is it your analysis is so flaky? You know, you say it might be this, might be that." Now, it again boils down to trade planning. Even what I'm doing is this. I've identified that I'm bullish, number one, so I only want to go long because I'm a trend trader. I identify key level of support that I want to take the trade from because I know that the price now is too close to resistance. I put my alarms near the support levels that I think might be a good place that the bulls might take it up again. And when my alarm triggers off, I will zoom into lower time frame to see whether price action reacts on the support level before taking a trade. So I always wait for lower time frame confirmation. Okay, so if my support level is based on daily chart, I will look at the 4-hour chart, 2-hour chart. If my support level is based on a 4-hour chart, I'll look at my 1-hour chart, 15-minute chart. Alright, I want to see confirmation. I don't just go in at support, just close my eyes and buy. No. Okay. If you want a bit of lesson on this, go back to last webinar. I talked about gold and silver. Even though I was bearish, the price action on the short-term charts did not give me my entry, and it helped me stay out of trouble. Okay, very important. All right, so I hope that covers a bit of analysis, Mr. Wu. I covered quite detailed into pound, Kiwi, and pound Aussie. So again, your analysis is good. I think I spoke to you before. Your analysis is really good. I think you're good at spotting trends. Just in terms of your trade planning, trade management, risk management, just focus on that. Of course, if you like, give me a call. We can discuss on it as well. Okay. Sunil, do you do pairs like pound Aussie, pound Kiwi have? Oh yeah. Okay, I just did that. Yeah, pound Aussie, pound Kiwi. Okay, I mean, for those of you who are not trading this cross-currency pairs, something you might want to look out for. I mean, the way I scan the markets every Sunday is that I don't focus on specific pairs. I scan at least 20 instruments to see which one is the best trending ones, because I only want to trade clear trends, very simple trends, so that I keep my trading simple. Okay, I don't want markets like I showed the Hang Seng chart just now. It's just really sideways, and I don't want to touch such things. I really like trending pairs. So since a few weeks ago, I'm focusing on my dollar pairs. I'm focusing on oil. I'm focusing on gold. Of course, gold now it didn't plan out to what I like, but dollar pairs, the yen pairs, gold, oil, these are really nice trades that has been working out really well for the past few weeks. Okay, so let me see whether I missed out any questions. Ben, if weekly differs from daily, which one do you base on to trade? I'm a conservative trader. I only try to trade when the weekly and daily tells me the same thing. If you look at Aussie dollar, if you look at pound dollar, if you look at euro dollar, if you look at dollar yen, you look at euro yen, you look at pound yen, you look at pound Aussie, you look at euro Aussie, you look at oil, the daily and the weekly charts for all these instruments are telling the same story for the past 4-5 weeks. Okay, so if you go back to your charts and you see those time frames, right, you notice that it's so much easier if the longer term time frames lines up for you. Okay, so I prefer to trade when the chart is both daily and the weekly tells the same thing. Okay, now let me give you an example of what is not telling the same thing. I mentioned this last webinar, my gold and silver trades, especially silver. Silver weekly still very bearish, but the daily chart is very mixed. Okay, so for such things, I'm just stalking it. I'm just waiting for my setup to come to me. I let the markets come to me. I don't chase the markets. Okay, so I can plan a trade that might only come a month later, but I let the markets come to me. That's a very important point. Okay, so if you want to be a really good trend trader, this is an exercise for you. You can do. Identify every week. For me, I do it every Sunday. Yeah? So every week when the market is not moving, because sometimes when the market is moving, especially when you have open positions, you get too emotionally attached to it and you can't really think straight. So over the weekend when the market is closed, go through all the instruments. It can be equities, can be indices, can be commodities, can be forex, and pull out all the instruments that has the daily and the weekly telling the same story, and put it in your short list. And I want you to monitor how the market trends for these two, for these instruments that have the daily and weekly on the same direction. How long it stays on the trend. Okay, you'll be amazed at how these trends can stay for a long time. And basically, this is the theme for my webinar today. Trends can really stay for a long time. Okay, so do that as an exercise and convince yourself that daily and weekly charts are very important. If you think there's a bit too high term time frame from you, by all means you can go to a 4-hour chart, 2-hour chart. It's really up to you, but for me personally, I always stick to my daily weekly chart for analysis first before I even go down to lower time frames to plan it. Okay, other than weekly and daily, what other time frames would you compare? Okay, again, depends on your type of trader. You might be a scalper, I might be a position trader, so two totally different ways of trading. But again, I always use multiple time frames. My kind of trading, I'm an intraday to swing trader. So for me, weekly and daily is very, very crucial. Okay. But you need to ask yourself which charts do you normally execute your trades on? If you are the type who feels comfortable on holding your trades or measuring your risk to reward based on a 15-minute chart, it's totally fine. So maybe on the 15-minute chart, your risk to reward, typically your risk may be about 30 to 40 pips or 20 to 40 pips. And your target is maybe at least about 20, 40 to 50 pips. Then maybe you're a bit more of an intraday trader, but it does not stop you from looking at the high-term time frame like the 1 hour, the 2 hour, the 4 hour charts. It's always good to have a higher time frame reference. Okay? Or if you are a swing trader and if you like to execute your trades based on the 4 hour chart, so 4 hour chart, typically your stop loss take profit will be around what, 50 to 100 pips, right? Again, it does not stop you to look at the higher time frames like the 8 hour, the daily, the weekly, just to have an understanding of what's happening on the higher time frame. Okay, so use multiple time frames. It's there for you. Use it. Okay, because it's a very, very powerful tool that you can use. That's why I do not want to put any lagging indicators on my analysis. Maybe in the future I might do it if you guys request for it. But right now I just want you to focus on high-term time frames, how to identify trends, how to understand, how to identify support and resistance, and have your bias. Okay. Miss Lee, yeah, I'll go to your A50 really soon. So sorry about that. Is 1 or 2 minute, 3-minute chart okay for scalping? Yeah, I mean scalping, yes, scalping essentially you're looking at 1, 2, or 3-minute chart. But again, even though you're scalping, if you're executing on a 1-minute chart, it's always good to look at a 5-minute chart, 10-minute chart, 15-minute chart for cross-reference. Okay, what you don't want to do is maybe if you're a scalper, you enter a trade on a 1, 2-minute chart, but you look at the daily chart for analysis. Now that does not make sense at all because there's too big a gap in terms of the time frames. Okay. Now, if you attend any of my seminars or my webinars or whatever, you notice I always talk about the same thing because I've been using these strategies, these ways of analyzing for the past 5, 6 years. So this is what I know. This is what I do. This is what I know. I'm just sharing with you. Okay. If you ask me about harmonic wave pattern, Ichimoku, I'm not familiar. I don't use it. I can't share much. Okay. But basically, if you are a scalper, short term, it's always good to always use a high time frame to just cross-reference as well. Okay, I'm not a scalper. I'm a swing to intraday to swing trader. Okay, so that's 2 forex pairs. Any other forex pairs before we move on? Okay, let me just do a quick one. Dollar yen for the benefit of those who are watching recordings. Right, yen is always in play. I think Ryan mentioned to you that the Japan elections is coming up this Sunday, so stay tuned. Okay, I don't think Abe will lose the seat, but if anything drastic like that happens, be prepared for a correction on most of the yen pairs because Abe is the key driver of the stimulus that's going on in terms of what the BOJ is doing, what the government is doing. Okay, but dollar yen, as you can see, let me just go to the weekly chart. Okay, weekly chart again. Super bullish, really bullish. In fact, it has been bullish since 2013. You notice how the trend has not changed much. It went on the bullish trend, consolidated for a few months, uptrend again, consolidated for a few months, uptrend again, uptrend again. Bullish, that's about it. On the daily chart, okay, still very bullish, Again, look for support if you're looking to buy. Not much to plan on daily chart, so let's go to a lower time frame like a 4-hour chart. Okay, so this is what I drew before my webinar. Little trend line here supported around the 120 level. Okay, I will draw a line the 120 because it's around the trend line and the visual support and the psychological 120 support level. So look out for this level here. If the market makes a lower high, meaning that if the market does something like this, hits the support, comes up, and starts coming down, okay, again, look for the 120. If it breaks, right, then you might want to look for these levels here. Okay, let me just draw this line. Okay, back to close to the 119 level. Let me just get this done. Let me extend this trend line for you. Okay, anywhere close to 119 level. So I'm looking at the 120 and close to 119 and this trend line level here in terms of support. All right, but dollar yen is just very bullish at the moment. Okay, it's just very bullish at the moment. So I'm just looking for support to take it up. Yep. All right. So, but just bear in mind, yeah. I mean, if you're holding on to your yen open positions, especially to Friday, make a judgment call or follow your trading rules in terms of whether you keep your positions over the weekend, because I think the yen might move quite a bit. The Nikkei, the yen, based on the elections this Sunday. I mean, my trading rule is, as any trades, I try to close everything on a Friday evening. Okay, because anything can happen, especially when there's big news over the weekend. So it really depends on your trading rules, but I like to clean all the positions before the weekend. Because you just take note, I mean, even your stops, right? If the market gaps, your fill is the next best price. It's not your stop. So if the market gaps, just take note, your stop loss might not even be filled. It will be filled the next best price. So it might be worse off for you. Okay. All right. So there's dollar. Now, any other questions on forex pairs before I move on to a quick look at the commodities, followed by other questions like the A50 and things like that? Any other question on forex? Okay, if there's nothing, let me move on to some commodities. Okay, first things first. Let me touch on gold. Okay, now gold analysis not changed from last week. Nothing has changed. Nothing much has changed. If you look at the weekly chart, I am still bearish on gold based on longer term time frames, the weekly chart, and this is the trend line. So these are the circles that I drew. This is a key resistance anywhere between 1200, sorry, to 1180 to 1200 level. Hopefully, if the resistance is still respected, I'm still bearish on it. However, if it makes a clean break above this level, then I need to take a step back and reassess my trade plan. Okay, if it breaks through here. Okay, if not, I'm still looking around this level here to see whether the bears has still enough momentum to push it down, because I'm bearish. Okay, weekly chart has made a lower low. Key level 1180, which I mentioned many times, has been broken downwards. So I just need confirmation. Okay, right now, I think Ben mentioned, Ben had a question just now. What do I do when a daily and weekly chart is not saying the same thing, right? And this is a good example for that. Okay, the answer is I'll do nothing, because it's quite hard. So I still have my bias. So this is my buy. I'm still bearish. Okay, I'm looking at key resistance level. But if you look at the daily chart, look at that. It was working out nicely. It came down from a bearish flag, consolidated quite a bit, broke down, and I was hoping that it will make a new low below the 1140. But what happened is that I can't remember what news came out that day. I think US dollar corrected a bit and gold just shot up. So this big bullish candle on daily chart, it caught me by surprise, but it kept me out of trouble as well, because there was no, even though I was plotting a short at resistance, this big bullish candle made me take a step back and reassess the market again. So you can see a daily chart, neither bullish or bearish, just consolidating. But the weekly chart is still it's still bearish. So it's a bit of conflict. I'm just willing to wait. All right, a key thing that will tell me that the bears might come back in play is that if we test a few more, if you see my line drawn here around the 1215, 1220 level, a few times the bulls tried to break above it, couldn't, and as long as we stay below this level, and if we break maybe back below the 1185, 1180 level, then I'm more inclined to think that the bears might come back to play, and my longer term bias might be still intact. Okay, so let's go. Hi, Mr. Rama. Thanks for attending today. Aussie dollar, is it? Okay, yeah, I'll get to that, because I covered Aussie dollar quite extensively. Is it okay? I'll tell you what. I'll give you a call. I'll give you a call later just to run through the Aussie dollar. Okay. But there's this gold for you. Okay, let me touch on silver. Silver looks a bit more bearish than gold based on the weekly chart. You notice gold broke a key support level at 1180. Okay, but it hovered around it. Silver broke a key support level at 1850 very convincingly. And right now, it hit 1400 and it make a slight retracement. So silver definitely seems more bearish. Okay, this area here might be a potential lower high. So again, price action, right? You got a lower high here, you got lower low, and you got potential lower high here. Lower low, lower high. Okay, so what I'm looking out for is this level here, around the 1670 level. I'm still bearish, longer term charts, but again, my daily chart is telling me, giving me a slightly different story. So for silver, I'm looking anywhere between 1650 to 1670. If I see more bears coming in here, then my long-term bias to the downside might still be consistent. Okay, so this is a really good example. So gold and silver are just staying on sidelines for the next until the market wants to clear itself up. Again, we are retail traders. We're not here to move the market. So the market will give you conflicting signals. Do not be afraid to tell yourself, I'm stepping aside first. Okay, again, I'll always wait for the markets to come to you. Do not chase the markets, right? So there's gold, silver. All right, any other questions on commodities before I take a few other questions? Okay, all good. So let me move on to China A50. China A50 has been on steroids, man. I'm just looking at it the other day. Xinhua. Oh, Lenny, you're also looking at China A50. Okay, we're a few China A50 fans here. Now, this is a very fundamentally driven move as well. I mean, just the matter, just the way it's shocked up. Look at that. It's even more, and you thought dollar yen was bullish. What's this? It's just crazy. It seems like they launched a rocket or something. But just very, very bullish. Okay, Lenny is asking what is the resistance. Okay. Now, for those of you who've seen a chart like that, okay, and you are not in any long trades, please, 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 please do not just look for resistance and short. Okay, because the trend is super bullish. Unless you have trillions of dollars and you try to reverse the market, then you might be able to do so. You might want to give me a call first as well. But if not, please, please do not just see resistance short, yeah, because the trend is super bullish. If you are just trying to short, maybe you want to scalp a few pips, fine, but you just need to know that you are counter trend, which means that you need to be absolutely clear on what you're doing. Okay? Yes, you're long at A50. Awesome. Good one, Annie. I'm just saying this because I see a lot of clients very tempted to short whenever they miss out on a big move and they see resistance, just close their eyes and short. Okay? Just very dangerous. You can do it. I'm not saying you can't do it, but you need to know when to get out. Because if you're short, if it breaks a new high, you need to absolutely get out of the position, get out of the way. It's like trying to stand in front of a train. Okay, if the train is coming, if it goes past a barrier, just get out of the way. All right. So let me just look. I need to look at the monthly chart to see a resistance, simply because it's just has been so bullish. Even the psychological resistance that I thought 10,000 would be respected doesn't seem to be valid at all. So monthly chart, I can't tell much from this. Not enough information. Let me look at the weekly. Give me a moment. Yeah, let me just have a look. Yeah, what I thought was resistance at 10,000 was. I mean, this is quite a fundamental move. Now, okay, I do not have enough chart data to see US resistance. Okay, but it does not mean that you can't find a level to see where you can take profit from. Okay, I need to look at my Bloomberg chart because I really do not have. I think the next logical area probably the 10,500. Okay, but I do not like to just throw a number out in the air. My charts here, I do not have enough data for that, unfortunately. Let me just move into a lower term time frame. Okay, now right now weekly super bullish, monthly super bullish, daily super bullish. If you're not, let me talk about two things. If you're not in any long positions right now, okay, the way I trade, I always mention this, I prefer to wait for a pullback to support levels. Okay, right now it's just days after days, weeks after weeks of green bullish candles. Okay, but if you look at the 4-hour chart, you'll be able to see a bit more clues, right? I mean, if you, let's see, you can see some kind of trend line forming here. Can you see that? Okay, so there's still analysis to be made. Okay, so 4-hour chart, let me see whether I can extend this trend line. No, I prefer this. A little bit of a channel forming. Do you guys see that? So every time it hit the support here, you notice it bounced up, support here, bounce up. So you can use this channel as a guide. All right, Lenny, if you're looking for resistance, because my high term time frame, I can't find any resistance level. If you want, drop me an email, give me a call. I can get a Bloomberg chart and try to see where's the logical level of resistance. But I would say anywhere between the channel resistance and close to 10,500 level, 10,500 level. Okay, but right now it's just very bullish. What I want to look out for is I always prefer to take it on support. Okay, so the first level of support that you want to look out for is back to this channel support around the 10,000 level here. Okay, you can see that this channel was respected on December the 8th, which was yesterday. All right, it tested it, bounced up. Okay, in fact, the candle couldn't even close below the 10,000 level. So next level I'm looking at is around here. Hopefully it will test the support here and shoot up again. Okay, around 10,000 level. Keep that in mind. If it breaks below 10,000 level, does not mean that it's making a long-term reversal. No, okay, maybe it's just going to consolidate around another support level. So that's why you want to plot where's another support level. I would say around 9500, somewhere here. Okay, but right now it's just very bullish. Okay, now how you want to take your profit, right, Lenny? Where's your long entry, if you don't mind sharing? Okay, I'm not sure where you took your long entry from, but just bear in mind, use this channel as a guide. Okay, anywhere close, you cannot be spot on. You can't be spot on, or you're on an ETF. Okay, never mind. You cannot be spot on profit taking. Okay, but what you can see is you can go to a lower time frame chart. Okay, for example, you can go to like a 2-hour or 1-hour chart, and if you see a bit of consolidation, right now it's still very bullish. Yeah. So what you want to see if you see a bit of consolidation close to the channel that I mentioned about, and the market doing something like this, start consolidating and breaks a new low, then maybe you can take profit somewhere here at the pullback, because most probably it's a bit exhausted. Okay, but again, it depends on how long you plan to hold the trade for, what was your initial trade plan and things like that. Okay, let me just draw the 4-hour channel again. Here was it. Okay. Okay, so this is the channel you want to look out for. So at this area, okay, if you pay attention at this level, close to 10,004, 10,005 level, this level here, if you see the market marking around, not pushing higher and starts falling down, then you want to scale up or take some profits here. Okay, of course, if you see the market breaking the channel, then by all means hold on to the trade, or maybe put a trading stop, but just pay attention around this channel. I think this channel is quite nice. Miss Lee, right? If you want to enter the trade right now, it's a bit close to resistance. I always like to enter support. So yesterday was a good level, around the 9.8. This was a good level. Okay, if not, you might want to let it come back to the channel support again and then see what happens on 10,000 level. Okay, but look for Lenny, look for the price action around the channel resistance. Go into lower time frame, 1-hour chart, 15-minute charts. See how the markets react to that.